Welcome to the MUFG Global Markets FX Week Ahead podcast with Derek Halpenny, Head of Research Global Markets EMEA and International Securities. It's Friday, 2nd September 2022, and joining Derek to pose some questions on the financial market themes for the week ahead is Simon Mayes, Director of MUFG's Global Customer Marketing Group for EMEA in London. The following podcast is intended for professional investors and eligible counterparties only, and not for retail clients. Any content should not be regarded as an offer to conduct investment business or an investment recommendation, but for information purposes only.
Good afternoon, Derek. Thank you very much for joining me.
Afternoon, Simon.
So I hope it's not been too busy a week. It's been quite eventful.
It's been hectic enough.
Yeah. This afternoon, I guess let's just go straight to the main data event of today. Nonfarm payrolls came in slightly higher than expected, the headline figure. Yet the dollar's finishing the week on a slightly softer footing than we've seen in the last couple of weeks. So why do you think that is?
Yeah, I think obviously the payrolls report, there were some good aspects within it. Yes, the NFP was stronger, but we had a significant increase in the labour force, 786,000. So even though employment increased by 442,000, the unemployment rate went up by 0.2 of a percentage point to 3.7. That's exactly what the Fed wants. You know, they want workers back into the labour market, getting employment. That helps, obviously, for the economy, but it also helps to keep wage inflation in check. And that was also evident in the average hourly earnings coming in a little bit weaker than expected. So all in, it was a good report from an inflationary perspective. But of course, and I think that's helped to weaken the dollar a little bit. But, you know, at the same time, we need to be mindful of Jackson Hole, obviously a week ago. And, you know, we did have good evidence yesterday of the markets being a little bit apprehensive about reading too much into weaker inflation. So the prices paid index in the ISM dropped quite sharply. Indeed, looking at it over a 5-month period from the most recent peak, it's the sharpest drop over a 5-month period in the prices paid index since 2011. So clear evidence of the inflation problems ebbing away, certainly in the manufacturing sector. But the dollar actually stayed pretty firm yesterday. And I think the consequences of Jackson Hole are going to stick with us. And the consequences being the Fed message was, we've got to stick at it. We've got to keep going. We've got to keep tightening. We can't be premature in assuming we've won the battle on inflation. So I think that means the kind of mix in terms of the Fed keeping going is going to, I believe anyway, keep financial conditions tightening. And ultimately, while the dollar has weakened a bit, I would still be biased towards the potential for the dollar to strengthen going forward. The other reason, just very quickly on the dollar being a little bit weaker, is of course the anticipation of what's coming in September, and that is monetary tightening. But of course, monetary tightening not just from the Fed, but from elsewhere, and possibly in terms of the same size of 75 basis points. So the ECB and speculation of that this week has helped to support the euro.
Yeah, actually, and I was going to move on to that next. You mentioned obviously the Jackson Hole hawkish rhetoric from the Fed, and actually the ECB rhetoric seems to be picking up a hawkish lean as well. So ECB meeting next week, what are we expecting?
I would lean towards 75 basis points. I think just my sense was the rhetoric this week was pretty concerted, end of last week and this week. So, we counted 6 ECB officials who essentially gave support to at least discussing the idea of 75 basis points, given the fact that it's not fully priced, but the market is certainly positioned well for it. I can't see why they wouldn't take the opportunity, given the fact that inflation in the flash estimate was stronger than expected at 9.1%, and based on natural gas prices, although they've come down this week, which is interesting, but generally the evidence suggests that inflation could get to double-digit figures, and from a forecast perspective, we'll see more big changes next week in the inflation and the growth forecasts, and I think it'll all justify, front loading and going aggressively sooner rather than later.
And yet it seems like the Bank of England have got a little bit quiet on that front. Maybe that's to do with the Conservative Party leadership race. I don't know, but we're going to get results from that on Monday as well. So another event next week. Did you think that's the reason? And what are we expecting from the Conservative Party leadership race?
It's definitely been a week of radio silence from the Bank of England, and I think that's allowed this kind of bounce in euro sterling, where the markets have a bit more conviction on 75 from the ECB. I think the Bank of England, though, they'll have their opportunities next week. So Catherine Mann speaks on Monday, and then we have the Treasury Select Committee testimony on Wednesday. So we'll have Bailey, Hugh Pill, Catherine Mann again speaking at that. So there will be a good platform for potentially communicating the need for, they won't say it's the need for following the other central banks, but the need for front loading, and they may give a hint of copying and pursuing what other central banks are doing. And I think, yourself living here, sterling's getting a lot more attention in the wider press at the moment. And I think, from that perspective as well, to go 50 when possibly the Fed, the ECB, possibly the SNB, the Bank of Canada will all go 75, and the country with the worst inflation here goes 50. It just wouldn't sit well in the FX markets. And, we could get that message from them next week. In terms of the leadership election, the voting is about to stop now. 5 p.m. London time, it closes. We'll get the announcement on Monday at lunchtime, and 93% probability based on the betting markets that it will be Liz Truss. So I'm sure it will be. The path for sterling is really going. The outcome of what Liz Truss does in terms of tackling the energy crisis and the cost of living crisis will be crucial for the pound. If Liz Truss announces some package that is very large, but very large on a macro scale without tackling specifically where it's needed most, I'm not sure the markets would take that particularly well. It's too big and it potentially doesn't resolve the problems. Something that's a more reasonable sized package, but very much focuses on where it's needed most, that actually could be more beneficial for the market. So in other words, a credible plan. There's a lot of we don't have enough time to go into all the different scenarios, but we've heard a lot of the ideas on a tax basis. But in terms of tackling the utility price problem itself, we need to see something on that. And I'm not sure Liz Truss is going to be going down that road initially. So, there's lots of outcomes that could come from this, but it will be important for the pound.
Thank you. I noticed as well, or some of our listeners will have received it as well, the new foreign exchange Outlook monthly report came out yesterday. Are there any major changes in forecasts that we should be highlighting in that?
We're sticking with dollar strength. So, we've had that profile for a while now in terms of the next couple of quarters. The dollar levels are slightly stronger at the end of the year, but, the picture is still the same. Dollar strength in 2022. And then some reversal in 2023. So we haven't really changed that. And the obvious catalyst for the swing around has to be some form of, I wouldn't call it a pivot necessarily, but certainly the Fed acknowledging that they've done enough to at least pause to consider. And I think they'll be very careful in terms of when that point comes, because obviously what they said at Jackson Hole in terms of being careful not to prematurely announce victory on inflation. They definitely want to do that. But, inflation, as we touched on earlier, there is more and more evidence of inflation coming down in the United States. So if there's anywhere where we could start to see evidence of it, I think it's going to be in the US. So that pause possibly becomes the consensus in the market towards the end of the year, and we get confirmation of that, and that allows for some reversal of dollar strength in the first half of next year. I think it also depends on the degree of tightening of financial conditions that we get over the next couple of months. And again, our dollar strength story is based on that unfolding over the next couple of months, which again is another reason why at some point the Fed will be able to pause. So yeah, generally stick with the dollar, more strength, and then some reversal in first half of 2023.
Yeah, I noticed as well in the latest weekly for the MUFG Researchers trading views, you went long dollar yen recently at these levels. Interesting. So, I mean, is that based on what you just mentioned there, this continued dollar strength, at least in the next few months? And what are the risks to that?
Yeah, no, first of all, we cut our euro dollar short. So we've had that running for a while. So we've taken profit on that and closed that out. Obviously, what we were speaking about in terms of the ECB next week. And also natural gas prices, which we didn't really touch on, but they're down 30% this week. And the rates market aren't really taking note of that. And at some point that could be something that is noticed, and it takes some of the crisis type scenario out of the markets, and that could help restore some confidence as well. But yeah, dollar yen, I totally accept. It's a bit of a risky one at these levels, but we've broken through. It's a pretty important psychological level, and I think we will be sensitive to intervention risk. And we had some comments from Finance Minister Suzuki today. I would expect that every time we've broken big levels, we've had those kind of comments. But really, can they intervene when Governor Kuroda at Jackson Hole was so alone in his messaging relative to all the other central banks in terms of the need to continue tightening? You've never had a starker contrasting in policy. And in that sense, I think the authorities will be very reluctant to intervene. I don't dismiss it as a risk, but I think they'll be very reluctant. So, we can get up towards the highs from 1998, which 147.66 is the intraday high. But I do accept it's risky at these levels. But the fact that we've broken and we don't think intervention is coming, I don't see any reason why we won't see dollar yen move further higher.
Thank you very much. Thank you for your time. Have a good weekend.
Thank you, Simon.
Thank you for listening to this MUFG Global Markets podcast. Rate, review and subscribe, and reach out to your MUFG sales rep for more information. Come back next week for more insights from the Global Markets Research team.